Keith, nice to have you here.
Great to be here.
Really, really nice to have you here. So I want to talk about a bunch of things, but I know Vern just did a poll, and I know we missed it, but let's, I don't know if we can bring that back up about what percentage are you expecting to grow your business over the next year, and I was curious what the findings were. This was the poll we just did, Keith, so flat to down. So most people are looking for, wow, 50% or higher.
I'd like to be in those businesses.
What kind of growth rate are you looking for?
I know. Not 50% or more, I can promise you that.
Are you surprised by that? I mean, these are mid-cap size companies.
No, I mean, I think if you're a mid-cap company and you have the right business model and the right markets, there's huge potential. I think one of the challenges the big multinationals face now in the current economic environment is how do you continue to grow at the pace when your business is as big as it is? I mean, today we're 850,000 hotel rooms open around the world, another 250,000 in development. And on top of that base, we're expected to grow and accelerate growth every year on a bigger denominator.
It's not easy to move the needle.
No.
What kind of visibility do you feel like you have on growth right now?
Around the world, we have it market by market. And then when you try to aggregate it all up, it's confusing. You know, because you can sit there and go half full and half empty, because you look at things like record low unemployment in many markets, continuing to see positive GDP growth, rising middle class, urbanization, rising, all these real positives. And then you get your head spinning on, you know, Brexit, US-China trade, Hong Kong, Germany going potentially into recession, political uncertainty in Mexico. And so literally in any given week, I go, things should be either really good or really bad, depending upon which news I look at.
It's that volatile.
It really is that volatile in this current day and age. And so I think what you have to think about, what's your long-term growth strategy to grow in an ever more increasingly volatile environment?
I want you to take us back 2 years ago when you first became CEO, and you had mentioned to me on our prep phone call that your industry was bifurcating, big getting bigger and the smaller companies struggling, and you had to make some decisions fast. Tell us a little bit about what you had to go through. Yeah,
I mean, we have been one of the most successful lodging companies in the hotel industry. So phenomenal total shareholder return over a decade. You know, we went public 14 years ago at £4.50. Today we're trading at £47. Returned $13.6 billion in cash to shareholders along the way. So great returns. The challenge is this: the industry is splitting. The top 5 hotel companies today have 25% of existing room supply, but 58% of the pipeline. So the industry is clearly moving to consolidate amongst the biggest players, and we don't want to get left behind. And so how do we effectively double our pace of growth over on the midterm? And it was really coming into saying, we've been incredibly successful. We've created a lot of shareholder value. The biggest players are moving at pace to grow faster.
Right.
What do we need to do to grow at that pace going forward? And we had to really transform the company over the last 2 years to be able to do that.
Well, and I want to get into what you did, because you really challenged your team, right?
Yeah.
What did you say? Like, here's what you guys have to figure out. What?
It was really, it was a difficult one because, again, the narrative had been, rightfully so, we've been incredibly successful.
Yeah.
But things had changed. And so effectively, I took my senior team, they didn't know about it, but I walked them into a room with board after board after board of content about what analysts were saying about us, what our people were saying about us, what was happening with the competition. And it was a stark wake-up call, which was good company, great potential, but are they going to be able to compete going forward? Can we be agile enough? Can we move fast enough? Our colleagues saying, you know, can we really compete? What's it going to take? And so it was that kind of in-your-face wake-up call, because it's quite easy for me to sit there and say, hey, we've been successful and keep doing what we're doing, and we'll keep growing margin and we'll keep growing cash, and we're going to be a good company.
Right.
But really, to be competitive, we were going to have to change, and I had to wake them up to that.
M&A was a part of it, and I want to talk to you about that. I want to ask our Breakaway members, pull out your phone once again. We've got a polling. What you believe is the best way to grow your company. And your choices are buy my way there, organic all the way, investments, technology. And as that poll comes in, I want to ask you, Keith, because I know M&A was a big part of your strategy. Technology. Organic. Okay, interesting. M&A was, though, the way for you guys.
M&A and organic. It was,
and both.
Yeah, both. And so I came out 2 years ago to our shareholders and said, I'm going to restructure the company. I'm going to take a bunch of cost out of this business, about $125 million of cost out. I'm not going to give any of it back to my shareholders. I'm going to invest it all for growth. And that growth is going to underpin effectively our ability to acquire a couple of companies and then launch 3 brands organically. Because in our business model, organic launches, phenomenal returns on capital, right? Almost infinite, because we don't have to spend that much. And so those are incredibly accretive. But we can't do everything organically. And so we recognize in the luxury space in particular, we were going to have to do M&A. And so we had acquired Kimpton Hotels and Restaurants in the US, the leading boutique company. We then went out and acquired Regent, and then we went out and acquired Six Senses. So again, uber luxury brands, lifestyle boutique, ones that have taken decades to build.
Right.
And so I was acquiring that IP, I was acquiring that brand equity because it would take me a long time to build and a lot of capital. But then I went out and launched a few brands where I could build those quickly, get them out there, and again, sell those and just grow the business, accelerate it that way. So a combination of the two. Growth
also sometimes means taking the underperforming, non-performing assets out as well, right? We're shutting properties as well.
Yeah, that's probably one of the hardest things in this job.
Why?
Because you can really convince yourself to keep bad hotels because they're paying you money. And when you're under pressure to perform, to show growth, to show revenue, cash generation, sit there and go, should I really take these hotels out? But you have to remind yourself in these roles in particular, you are the stewards of this business for the long term.
Right.
And it takes a long time to screw up a brand, but once you've done it, it takes a long time to fix it. And so we're consciously taking out about 2.5% of our system globally every single year and just culling out poor quality.
So reevaluating every year.
Every year we're taking out about 2 to 3% of our hotels. And that's just saying, you know what, it's a poor quality asset, wrong location, and to keep moving quality up and moving customer perception up, you have to do it. And when companies don't, they're more profitable in the short term.
Right.
They pay for it in the long term because effectively customers begin to lose faith and trust in you.
What about an investment that you make or a new property you open up? How much time is a fair amount of time to give it a go? And are you willing to say, wait, I made a mistake and this isn't working?
It varies by brand, and things like that. I mean, most of our deals are long-term deals, so you get 10, 20, 30, 40-year deals. So most of the removals are happening at the latter portion of the life cycle of a hotel. And really the question there is, do we renew it for another 10 years, another 20 years, or do we take it out? Or if we have a hotel that's coming near the end but isn't performing well, do we take a legal route and say, you know what, you're not meeting our standards and it's time to take you out of the system? We always try to work with our owners because, again, we're an 11 billion, almost 12 billion market cap company. We're asset light though. So out of 5,700 hotels around the world, today we only have an owned and leased stake in 21 hotels. Now, that's changed dramatically over the last decade. We used to own hundreds and hundreds of hotels. The last hotel we sold was the InterContinental in Hong Kong for $935 million, to give you context. So we had lots of big boxes, lots of real estate. We're now down to where we say we grow with other people's money because we partner with real estate investors around the world to open hotels. And so I always want to work with them to make sure we're a good business partner. But if they're not going to be good stewards of our brands, fundamentally, I have to take them out.
Makes sense. Where are you seeing growth the most when you look around the world? What are some of the markets that you find things are just kind of falling into place and there's a lot of demand?
So I'm originally from the States, been overseas for the last 14 years, lived in Australia, China, and now the UK for the last 7. I built our China strategy, and that is a third of our company's growth.
You were in China for a while.
Yeah, almost 5 years.
Yeah.
And it's an extraordinary market. And so today it's about a third of our company's growth and growing kind of probably 3x, 4x the rest of the world. On big numbers too. And so when you think about on a global basis, let's use US for example, supply growth in the US is around 2%. The supply growth in China, excluding the economy segment, will be between 8 and 10% over the next decade. So it's growing massively. And it's the level of infrastructure investment. So China is huge for us from a growth perspective. We're accelerating our growth in the US, but it's our biggest market. But then you've got other exciting markets like Japan is accelerating growth. Vietnam is continuing to accelerate growth. And you got pockets also in Europe now coming out of the kind of the doldrums after the financial crisis are beginning to see growth as well.
Where aren't you seeing growth?
Where aren't we seeing growth?
Where are you seeing kind of the weakness?
You know what? I mean, places that I think that should grow that aren't, like Mexico is a good example.
Yeah.
Mexico has great potential, but with the political instability there, you're seeing growth, but not the growth to the potential of that market overall. And you are seeing some slowing in some of the more mature markets now. UK is a good example, where there's not a lot of new growth happening here. London's doing fantastic, but the provinces are struggling here in the UK because of the impact of Brexit. Germany's beginning to slow down a bit too, getting close to being in a recession as well. The nice thing about our model, though, is we're in 100 countries around the world. So, it's a bit of some markets are down, some markets are up, and we continue to grow year over year.
I want to ask everybody, since you mentioned Brexit, got another question for you. What external factor is hindering your company's growth the most? And our choices are Brexit, trade tensions, that's all one, disruptive technology, lack of qualified talent, access to capital, overregulation, and other. So as those come in, we'll pull them into our conversation. But I'm curious, what external factor is hindering your company's growth the most, Keith?
I'll tell you what frustrates me the most, because we're growing quite well. We're actually doubling our pace of growth right now, so it's hard for me to say, is governments don't really understand the value of tourism and hospitality on the economic cycle of the world. So 1 in 10 jobs today that exist is related to travel and hospitality and tourism. About 2 in 10, close to, is what's being created. It's a huge part of the global economy. It's a huge part of giving people skills where they can start entry level and work their way up. And it's a huge part of value creation across real estate. Most governments really take this industry for granted and just assume it's going to happen. And so governments that really understand the value of tourism and infrastructure benefit from it. But I'll give you an example. One country I used to live in where the tourism portfolio got lumped with the resources portfolio, Australia. Imagine how much focus tourism got when the minister was also worrying about resources, which is the single biggest thing driving the Australian economy.
Not so much, huh?
Yeah. And it's sitting down with people thinking about labor, immigration policy. I've been pushing aggressively. I've had multiple meetings here in number 10. They're saying, you've got to rethink your immigration policy because you don't understand what the impacts of what you're suggesting are. And that's what frustrates me when governments really take for granted an industry and don't understand how much value it could do about accelerating growth and driving prosperity for countries and creating jobs.
Do you find it interesting? I just want to look at the response to this. What external factor is hindering your growth the most? They say access to capital.
I think if you're in a startup, I can understand it. What's strange
this is kind of an easy money environment. There is so much.
There's such a way to capital.
There.
Right now, we're in an environment where we have never seen more access to capital.
Private, public markets, especially private markets.
Yeah, incredible amounts.
Yeah. Does that surprise you?
It did surprise me in that. Because even like I was just in a meeting now in a real estate development group, and people are constantly saying, "I've got $2 billion of capital to deploy. Where can I put this?" Because
show of hands, somebody who wants a piece of that.
So anybody needs some hotel real estate?
Just a little piece.
And that's one of the real challenges in today's age, right?
Yeah.
You've got historically low cost of debt.
Right.
A huge amount of capital sitting on the sideline needing to be put to work. Where does it find the right returns? And that's driven some interesting behaviors in the public markets that we've seen recently.
Absolutely. WeWork, anyone?
Yeah.
Future growth. I do wonder about, you talked about China. I want to dig a little bit deeper into that because I have this little tricky times and strange bedfellows. Growth and geopolitics. And I think about China specifically, Hong Kong, there was some impact on your earnings. Others in the hospitality industry and the luxury industry are certainly feeling the result of those Hong Kong protests. I think about the NBA getting whipsawed after one of their coaches made some comments in support of the protesters. And then quickly the NBA saying, wait, we love you, China. I do wonder about, what is your responsibility and role as the head of a publicly held company, as a leader that is looked to when there are injustices around the world, and yet you still want to make sure the door is open for business? How do you reconcile those two?
Yeah, it's one of the tensions in leading global companies of understanding what level of drive for change and advocacy do you have to take, and what's your role in society overall. I think in this day and age, there is more of an expectation of global chief executives to take more of a leadership role on big issues. Whether that's, I talked about like sustainability is a big thing that we're focused on. We come back to diversity and inclusions and other things, because in general, people see governments failing in those spaces, and customers and colleagues look to us as saying, what are you going to do about it?
Right.
Now, when it comes to some of the broader issues of where are you going to work, we've been in place. We've been in China for 35 years. We're at the foundation of that industry. And so, we're working closely across China. How do we work with universities and schools to develop talent and help people to come in this industry and build prosperity and build careers? And so, we talk about our core purpose is true hospitality for everyone. And that means in the communities we work in. So we help build schools in China.
Right.
We partner with universities. We train and develop. We have thousands of students in our academies. Because we really fundamentally believe that as people travel the world more and stay connected, that the world's a better place. And that
do you see the results of that in terms of being involved in a place? And you have said no. I know we talked about a Russian deal, and you guys were like, nope, you're not going to get involved. But you're in China for a long time. You're in Saudi Arabia. You're in the Middle East.
Yeah, it's being an advocacy for change. We talked about, for example, in Australia last year, the team came to me and said, we want to publicly come out and support gay marriage. And I said, absolutely, we'll get behind it.
Change your logo.
Yeah, we changed our logo for Pride. And now we can do that there. Now, in some markets, I wouldn't do that because effectively I know that it goes against government policy or the laws. But how can we advocate for other change, try to make things better? And so, you mentioned Saudi is an example of where there's been transformational change for in the positive in terms of the Saudiization of the workforce, the role of women in the workforce, now the opening up of Saudi to now 51 countries visa on arrival. So lots of positives there. Now, without question, there have been challenges in the past, though, and things that aren't right.
Right.
And so, but if you're in the dialogue, you can help shape things for the better for the future and help continue to build out that industry. And the more that, more the countries open up, we believe it's better for the world.
And you do see the fruits of your effort. I'm going to push a little bit because I do think after Jamal Khashoggi, I think the world couldn't believe it, right? And I think everyone thought, okay, and the world did take a step back. Roughly a year later or so, Saudi Aramco, certainly see the financial community, everybody wants a piece. I'm not making a judgment call, but I do wonder, when is it that, companies have to put their foot down and say, this is not okay?
Yeah, and again...
And I understand there's cultural differences, but then there's injustices.
I think full stop, that was horrible and it was wrong. What happened? You have a choice, though, saying this is a country that is going to continue to open up, wants to drive for international tourism, wants to be more open to business, wants to open up to more cultures. Do you participate in that and help that happen? Or do you sit back and say, no, we don't want that to happen at all? And so, generally, I think when I go back to China, I go, the positive influence we've had on shaping the hotel industry in China is great. And we can do that in so many different countries in the world.
And you see an impact by being there.
Well, I see it in the people that we've helped in their careers. Right. And so I look at, so my team when I moved to China and the general managers there were principally foreigners. I would go into a room like this and running my Chinese business were basically expats. And we made a commitment when I was there 11 years ago saying, we have to localize our workforce because that's the right thing to do this industry long term. And today I walk into our leadership team meeting there, we're like 95% Chinese now. These teams have worked for us sometimes for 10 or 15 years, and so we've enabled their careers to develop and grow, and so that's the good that we can do as an industry to help grow people's careers and give them access, and then help people work internationally as well, too.
So when you think about some of the inequalities in this world, that is certainly a big issue right now, right? And it's certainly impacting elections around the world, and many would say rightfully so. You find that by being in a market, you can maybe help improve that?
Yeah, there's some markets we don't go into, and there's some deals we won't do. We mentioned there was a deal the other day that came up, and we looked at it and going, as far as we can tell, there's somebody involved here who's basically on the no list. And it was going to be a great hotel and a great location. I said, we're not going to do business.
So it would have made money for you guys.
Oh, it would have made money. It would have made a lot of money for us.
Yeah.
But again, fundamentally, when you're running, whether you're running a public company or a private company, the decisions you make define who you are culturally. And I always say to my team, people will hear what I say, but they will see what I do. So I can say all these great things about who we are culturally, but if they see me go over there and do that deal, they're saying he's in it just for the money.
He doesn't mean it.
Yep.
Diversity, women, people of all backgrounds, inclusion, and I love it that this is what came out of this group, rather than diversity, inclusion. How do you work that in, and how does that help you in terms of growth at the company?
It's a huge priority for me personally, and so I created the Diversity and Inclusion Board for the group, which I chair when I took over as chief executive.
And right away?
Yeah, right away. Yeah.
Did you walk in and be like, are you guys kidding me?
It was just a realization of where we had to change. We're a very traditional British company and pretty buttoned up. Like we wouldn't have changed the logo to the pride flag a few years ago. But it came down to being simple math. We need great talent. There's not enough out there, and we have to be a better company to work for. And so you can do it, say, we're going to be focused on diversity and inclusion because it's the right thing to do. This is business priorities. I can't attract enough high-quality talent out there around the world today. And so we have to head down that path of making sure that everyone, irrespective of preferences or ethnicity or whatever it might be, whose talent feels welcome to work in our company and has a great opportunity to grow. And it's been fantastic to see. And it's empowering to your organization when they see you actually making a difference.
Right.
And when people come in and want to talk to you about it.
Is there one, you talk about this board that you've created, so is it entry level all the way through your board in terms of creating diversity and inclusion?
It's all the way through, but it's both operational. One thing that we're challenged with is getting women into senior operational roles. We are really gender balanced to a point, and then it becomes male, especially in the
Why does it fall apart?
We've been trying to pick that apart, and really...
We've been around for a long time.
I know you. Well, two issues. One was, and I mentioned this walking in, there was clearly a historic bias against women in commercial roles.
Say that again.
There was a bias against women in commercial roles. It was, you're great in a functional role. You're going to be a great head of HR. You're going to be a great marketing director.
Just where women went.
But you know what? You don't really maybe have the sharp enough elbows and the hard enough drive to be in that commercial role. It's bollocks. Honestly. But it was the perception out there for a long period of time. Or that you have to, it says, act and look and be like a man to be successful in one of these jobs. And we have to dispel that myth. And so, I promoted now 3 women in the last probably 18 months into MD roles, and they're some of my top performers in the entire company. But 2 of them previously, were told directly they don't have what it takes to be in these jobs. Point blank. We're actually told.
This is recently, not so long ago.
Not so long ago.
Yeah.
And so, but what does it take in leadership? Proactive talent management. I sit down with my CHRO, and we're mapping out any time between 12 and 24 months of moves for people to make sure that they have the skills. Because the biggest problem is this. You have an aspiration to do the job.
Right.
We haven't given you the experience. The job comes open. What happens? We sit there and tell you, you don't have the experience.
Correct.
We fundamentally are now managing the talent, saying, what are the experiences you have to be ready for that job in 18 to 24 months? And now by doing that, we're setting ourselves up with much more optionality than we had previously.
Because it's not easy to find workers anymore.
It's not.
And you don't want to lose them. That's expensive for the company.
No. And the thing is, everybody's trying to recruit and fish in the same pond. You just can't keep doing it.
So I have to ask you, why isn't your board 50-50, men and women?
It's been a challenge. We get awards for it, but we're not 50-50 yet. I'll be blunt with you. I talked about it. There's not enough women who have been in the senior management roles in companies, so we're really struggling to find enough of that talent out there. And that's where I'm pushing, more and more. We need more women CEOs, more women CFOs, more people in the C-suite in senior management. So there's more people who've had some of those experiences to get ready for boards.
I did push him though, because I said, okay, wait a minute. There have been a lot of boards that have been predominantly men for a long time. And let's see, we had the financial crisis, we've had accounting scandals. So even though we had people who had the skills in place, we had a lot of problems. I'm just saying. You've been a good sport. I do want to, we only have a couple minutes for questions. Does anybody have a question for Keith? Really? There. Do we have the mic for him? Do we have the?
That's all right, I shall.
Okay, we'll get a mic to you.
To what extent do you see Airbnb as a threat to you?
Good question.
Excellent question. So for every analyst meeting I had, and those of you that know what being a public company is like, they're constantly hounding you on anything that could threaten your business. They were convinced for 4 years that Airbnb was the existential threat to this industry. We finally have convinced them that's not the case, because home sharing has been around as long as hotels. And in general, what digital has done, whether it's the Ubers of the world or the Airbnbs of the world, is they have removed friction in the path to purchase in previous industries and effectively been able to consolidate it. And so Airbnb basically has put out a lot of other businesses out of business. It's brought a little bit of supply in, but it's had just a nominal effect on our industry overall. But it was one of the hardest things to be in the public eye. People going, they're going to kill the hotel companies. And we're like, no, they're not, and here's why.
Do you have another question?
What about the
I'm sorry.
Sorry.
Let's go to
Sorry.
Mike, and we'll come back to you, I promise. We'll try and be quick so we can get a few more questions in. Go ahead, please.
Hi, it's a question about, equality, inclusion, everything, and, women being one of factors, because people can be diverse on ethnicity, on origin, on many, many things. How, in your experience, you define the most effective way to deal with certain things that are not spoken within teams? Western versus non-Western person, different backgrounds, different universities, degrees. Just for clarity, I'm not complaining about my case, but observation. When you see this hidden attitudes of superiority, inferiority,
So a bias against?
bias against people, and if you observe, for example, I come from big investment bank, right? And then I run my own company, or you go to different places. It's I think, a common problem globally. That's my observation.
Without question. Funny, at the breakfast meeting I was at this morning, we were talking about, so we're running right now a global program about conscious inclusion and unconscious bias. And we were talking about, we often think about it's men versus women, but there's so many other unconscious biases that are out there. And not because you were speaking, but one I highlight regularly and I learned was non-native English speakers in our company, we didn't realize there was an unconscious bias against them. Because effectively, in the hospitality industry, we're about executive presence and the ability to present and so forth. And so it was amazing, right? So our talents in Asia who speak sometimes 3, 4, 5 languages, and English isn't their first, where some of their views were being discounted because they weren't a native English speaker. And so what we've had to work through is really understanding of how do we help facilitate much more structured conversations in those environments to get the best and brightest out of all of our people. And it was an aha moment for me, and I hadn't realized it. It actually came from our China team, because one of our most intelligent leaders in China presented, and people were kind of really not engaging, and I'm like, this is one of the smartest people in this entire company. But because he's not perfectly articulate in English, people were kind of discounting what he was saying and not being able to get across. So it's a clear point of.
So what did you do?
In that case?
Or just in general to get the company to think differently?
Well, with him actually, I coached him. I worked with him one-on-one because he was going through, we were doing a practice session for him before presentation. I realized I'm going to have to work with him and help him do this. But also making sure that we cued the team up on what were the critical things we were trying to get out of this, and that they knew how to engage with him.
Right.
And not just be expecting to be spoon-fed it. But it's a tough one, and I think that particularly in global companies, multinationals, you got to be really cognizant, particularly ways of working and style too. I mean, my team in China used to joke with me, I grew up in the US and pretty linear, point A to point B, straight line, get things done. And if you work in China, you'll know that there's nothing straight line about working in China. And so the team asked me, said, if I would put a little bit more wave in my line, they would try to straighten theirs out a little bit. And
clever.
And we worked through that. And because
clever.
And you have to think through who you're trying to lead. And when I was writing our China business and strategy, my favorite quote was one time one of my top team walked into me and said, Keith, it's really hard to draw elephants if you've never seen one, and you're asking me to do that every single day. Super intelligent, had never worked in a scale business, never been outside of China, and so I'm asking this person to do stuff without contextualizing it for him and helping. And I was like, wow. Very humbling moment, because I was frustrated that he wasn't performing, and it was actually on me why he wasn't performing.
Wow, that's a great lesson. I promised you really quickly, but we have to be quick. Otherwise, Kat is going to get mad at me.
Okay. Keith, looking down the field, you've seen Oyo come to market in India and China. What's your impression of them and the risks that it plays to your firm?
Oyo. Wow, they're an interesting company.
Who are they?
Oyo, basically, are being backed by SoftBank now.
Okay. Forgive me.
3.5 times growth.
Pardon?
3.5 times growth in the last 6 years.
Yeah. All I would say is take a step back. I think there's a lesson to be learned from WeWork, which was when you have high growth, what's the path to profitability? Because fundamentally, in the capital markets and what's the challenges today with low cost of debt, lots of capital, the path to profitability for companies hasn't been as challenged as it should be. And so I think WeWork was the first aha one. And so I would leave it at that as to how I think about that business model.
Well, I do find it funny that in the markets, all of a sudden, it's like, oh yeah, you're supposed to make a profit. We learned that in business school,
Well,
right?
I was really frustrated. One of these companies that was losing $2 billion a year was going to have a market cap of $50 billion, and I'm making $800 and something million a year. My market cap's $12 billion. I go, there's something just not quite right here.
Remember what Ann said about math this morning? Thank you so much. Really enjoyed it. Thank you, everyone.
Thanks, everyone.